Alright everyone, Cowboy Trades here. Welcome back to the channel for a quick update on Bitcoin, the equity markets, and new economic data we've got concluding the May job report. Before we do dive into today's content, I've just got an announcement. Me and Trezor have partnered, and we're going to be giving away a Trezor Model 1 to one of you for completely free. If you do want to enter this giveaway, all you've got to do is come and join the Discord. The invite to that will be down below, or you can find it on the About section of my YouTube. Once you have joined, all you need to do is come over to this channel, Trezor Giveaway, and react to this photo with the orange emoji. Once you've done that, you've entered. Within 72 hours, one of you will be randomly selected and you will be shipped a Trezor 1 for completely free. So there we go, just a quick announcement. If you do want to check out Trezor's products, I will leave a link to that down below. But yeah, definitely come and join the Trezor 1 giveaway. We've still got a relatively small channel, so you've got an amazing chance to get one of these products for completely free. So let's dive right into today's content. So let's start off with the May job report, which was just concluded. So in every single way, shape and form, this job report basically destroyed expectations to the upside and the downside. First of all, we had average hourly earnings. These actually basically came in as forecast. There's really not too much to explain with the average hourly earnings. If these go up though, this is a sign that inflation could start creeping back. However, this is unmoved. So we'll just move on from this data point. US non-farm payrolls. This measures the change in the number of people employed in the past month, excluding the farming industry. Now, we added 339,000 jobs in the month of May. This is a massive, massive signal that the Fed is going to be looking at. This massive increase in the month of May definitely means that the Fed can continue raising interest rates even further. However, we actually saw the US unemployment rate skyrocket to 3.7%. This was previously at 3.4%, and this was forecast to be 3.5%. So in terms of the unemployment rate, this absolutely destroyed expectations. US non-farm payrolls destroyed expectations, coming in at 339,000 instead of 180,000. Now, you might be thinking, wait, the non-farm payrolls went up. How has the US added 339,000 jobs, but the unemployment rate has gone up? Well, the difference in these is that self-employment isn't included within the US non-farm payrolls. And if we come over to our final data point from this, we come over and look at the US participation rate, we can actually see that the participation rate has not done anything whatsoever. The participation rate is at 62.6%, the exact same as it was in the past data point. So while non-farm payrolls are getting added, the participation rate is remaining flat, and we have seen a drop in self-employment, which is why we're seeing the unemployment rate actually go up to 3.7%. So yeah, the May job report was very, very mixed in terms of the unemployment rate. This going up, believe it or not, is bullish in my opinion, because, you know, the higher the unemployment rate goes, then the weaker the US economy is going to be, and contrary to popular belief, the weaker the US economy is going to be, that means that the Fed can pivot sooner than anticipated. If the US economy is still showing major strength by adding 339,000 jobs a month, then clearly the US economy is strong enough that the Fed can keep on raising interest rates. So we've got a really mixed bag here. On one side, the unemployment rate is showing weakness, but the non-farm payrolls are showing strength. The participation rate remaining the same, and the cost of labor remaining the same. It's a very 50-50 report. And in general, in my opinion, because of this, I think the Fed is going to be looking at raising the interest rates by another 25 basis points. They've previously talked about how, hey, we may stop in the next meeting, which by the way is in 11 days, but coming into the next meeting, they may consider raising it again. So in general, I think the interest rates are quite likely to push up to about 5.5%. And of course, concluding the May job report, the equity markets rallied on Friday, with the S&P 500 moving up to 4,280. It didn't really seem to care about the unemployment. It was only keeping its eyes on the US non-farm payrolls, which is pretty degenerative in my opinion, but nonetheless, these are what the markets do. They pick and choose the data that they want to listen to, depending on the scenario. We are still trapped within this massive, massive, massive call options wall, ranging between 4,200 for the SPX up to about 4,325. In general, unless we manage to get above this high right right here on the 15th of August 2022, the macro is still looking more bearish than bullish in my opinion. Now, wrapping up the stock market analysis, I just wanted to conclude on the iShares TIP ETF. Right now, if we come over to the iShares TIP ETF and overlay the S&P 500, we've obviously previously talked about the fact that the iShares TIP ETF is a leading indicator, and this often bottoms and tops prior to the SPX and the Nasdaq. Now, right now, the iShares TIP ETF is absolutely bleeding to the downside. You can see this absolutely beautiful bear flag playing out over on the candlesticks right now, and it looks like the iShares TIP ETF is going to be breaking down into new lows. And just a quick update, we've talked about this many times before, but when the iShares TIP ETF made new lows, every single time it made new lows in the bear market that we've been in, the S&P 500 has lagged behind, and it has soon after come down and made new lows following what the iShares TIP ETF has been doing. So I think we're just waiting for that final leg back down for the iShares TIP ETF, and then a lot of the bond markets can be looking for a rally, at which point then we can start to see, when higher bond returns come back into the markets, investors are going to be looking at those, such as the 2-year treasury bonds, instead of looking at things like the SPX, and that's when I think we'll see the SPX take that snap back down to the downside. And in terms of the DXY, we rallied at the end of the week due to the debt ceiling deal being passed through the Senate. On Wednesday, we had information that this was passed through Congress, and then this got passed on to the Senate, and this was approved on Friday. And you can see the DXY, throughout the week, it was breaking down, coming back down to this massive support box we talked about in our previous video, also back testing the 0.5 Fibonacci. And what do you know, on Friday, we had that news confirmed that the Senate had passed the debt ceiling deal, the US has raised their debt ceiling, and we had a massive rally on the DXY. If you're wondering where the support is, if we come over to the weekly time frame, these two resistance boxes have been here for respectively 8 years and 7 years, and we've finally come back down and back tested both of them as support. On the daily time frame, you can see this is exactly where the DXY rallied from on Friday. So things are starting to look up for the DXY, and like we talked about with the iShares TIP ETF looking like it's about to take its final leg to the downside, that is bullish for government bonds. And with government bonds being so bullish and offering such high returns, people are going to start taking their eyes off risk on assets to go for high returns in risk off assets. So there we go, there's the equity market analysis. Let's dive right into what's happening for crypto. Now, the Bitcoin segment today is going to be relatively short because 3 days ago we made this video, the markets are about to nuke. It's a 20-minute long video with 5 minutes comparing Bitcoin and the DXY and a 10-minute BTC segment. So a lot of my thoughts haven't changed from there. So I wanted to update one particular chart we haven't looked at in a while. And of course, since my last video, we have a new monthly candle, and I want to discuss what I'll be expecting for the first few weeks in the new month. So let's dive into the first chart. This is the USDT dominance at the top, and at the bottom we've got Bitcoin. This chart is pretty much self-explanatory. These two are inversely correlated. Now, from a fundamental perspective, that makes sense because let's say, for example, you're invested in crypto, right? If you're going to remain in crypto and you're going to sell your Bitcoin, you're going to sell Solana, etc., you're just going to sell your crypto, you're quite likely to move into stablecoins, right? So let's say hypothetically you sell Bitcoin, you buy stablecoins. This is why you see an inverse correlation between the two. The market cap percentage of the USDT goes up and people are selling their cryptocurrencies. And the same thing happens when people are selling their stablecoins. When people sell their stablecoins, they're buying back into crypto. And this is why you see these phases of red over on the market cap USDT dominance correlate to massive rallies in Bitcoin. And when you see people start to, rush back into stablecoins, this is typically where you see large drawdowns in Bitcoin's price. Now, if we zoom into what's happening for the USDT dominance, you can basically see for the entire year, people have been getting more into the USDT stablecoin. Now, do bear in mind, since that period, there have been a few stable coins which have failed. You can also look at something like a USDT plus USDC dominance. I find this chart just much more easier and crystal clear. But nonetheless, you can really see since the 10th of April, we've been having a sharp rally up in terms of the USDT dominance. And that is obviously correlated to a local top for Bitcoin. And I do think we are going to see the stablecoin dominance increase while the price for Bitcoin decreases. So keep your eye on this chart over here. I do potentially see us pushing up to the next level in this chart round about 10 to 11% for the USDT dominance, and that could correlate with a nasty drop to the downside for Bitcoin. I looked at on-chain, I looked at whale wallets. There's really nothing new that I do want to talk about in the charts right now, and I don't want to waste your time and, regurgitate everything we talked about in the previous video. We have had a nasty weekly rejection on the 618 Fibonacci since our last video, and the one thing I did want to focus on is the fact that we do have a new monthly candle on the BTC USD pair. Now I'm going to tie these two charts together because what we're seeing on the weekly time frame for Bitcoin is Bitcoin steadily approaching a bearish MACD cross. Now, if you look back at previous data points, what normally happens when you get a bearish MACD cross is you get a temporary bounce and then a meltdown. Over here, you can see this weekly candle and this weekly candle, even though they were bearish, this one had a huge wick to the upside and this one also had a wick to the upside. So basically in every single data point, you get an extremely bearish weekly MACD cross, but in the immediate short term, maybe for a day, maybe for a week or two, you have a short-term bounce in the price action. So what am I going to be expecting following Monday? Well, I think next week we're going to be setting up for a bearish MACD cross. If not next week, then it's definitely going to be the week after that. And also, we have a new monthly candle on Bitcoin. So why is this important? Well, the monthly candle closed its wick right on support on the 200-week moving average. And I mean, look at every single monthly candle in Bitcoin. You can very clearly see, even if you're in a downtrend, a lot of the time, most of the time, you have a small wick to the upside. You have a small wick to the upside before you get ready to break down further. And as it's only been, 3 days into the new month and we haven't really had much price action either way, you can see that this monthly has come down and back tested the 200-week moving average. And right now it doesn't really have a wick to the upside. So based on the fact that we could be getting a bearish MACD cross on Monday, and also based on the fact that we have a new monthly candle, I don't find it completely out of the question to see a short-term bounce coming in on Monday, Tuesday, Wednesday, something like this, as we do have a new weekly MACD bearish cross coming, and also we've got a new monthly candle on Bitcoin. So I'd love to see this correlate with a nice retest of 28,000 for Bitcoin before a break back down to the downside. You can really see as the 200-week moving average is pushing up and as the 28k resistance is remaining at the exact same level. We talked about this a few weeks ago. We had a larger range. Right now we are just getting squeezed and squeezed and squeezed. Bitcoin is in an extremely tight range and it has a new weekly opening on Monday. And of course, we've just had that new monthly candle body opening. I'd really like to see Bitcoin push back up to 28,000 and then confirm a solid rejection before moving back down. We could potentially look at some short scalp opportunities if that does happen. I'll keep you updated. But yeah, that's really what I see playing out in the higher time frames. In general, if you have been watching my videos, you know that this is the most important range for Bitcoin right now. If we load up the bull market support bands, EMA ribbons, 200-week moving average, these are the main indicators that I'm looking at. You can see we're beneath 28,000, but we're still above all of these moving averages, and these moving averages are moving up. This price resistance on Bitcoin is not moving anywhere whatsoever. Of course, it's a flat line of resistance. So Bitcoin is getting squeezed right now and preparing for a monumental move. Whether it's up or down, we'll find out soon. What do you think? I personally think that we're going to be breaking down, but if we do start flipping 28k as support, I will have to lean short-term bullish. In terms of the lower time frames, what I also find quite interesting is if we do have that retest of 28,000, we could once again retest this neckline of the head and shoulders as resistance. We do have price targets down to the downside, like the mini CME gap, 24,850, head and shoulders at 24,100, massive CME gap to the downside at 20,300, and the bar pattern price target down at 19,500. I personally really don't see any more reasons for the equity markets and Bitcoin to rally to the upside. Like I said at the start of the video, we did just have some bullish data on the job report. That has come and gone. We've just had the equity markets rally based on the fact that the US is going to be raising their debt ceiling. Bitcoin doesn't seem too bothered by that. So there's not really any reason, in my opinion, that we could see Bitcoin rally up to the CME gap at 36,000 unless we have a Fed pivot and the Fed cut their interest rates in the next 11 days. Now, we're not going to dive into this again on the channel. We've talked about this many times. We've looked at previous examples and we've showed you what happens when there's a Fed cut. In the macro, it's very bearish. However, if you look at the last time the Fed cut the interest rates on Bitcoin, Bitcoin rallied for about a week before getting absolutely destroyed. So if we do have a Fed cut in 11 days, sure, could 36,000 happen? It's possible, but in the macro, a Fed cut really just solidifies the fact that there is no further reason to be bullish, and that is when the final cut comes, in my opinion. You can also see a retest of 28,000, if that happens next week, would beautifully line up with one final retest of this golden fib before breaking back down to the downside. You can basically see, if we're looking at this golden ratio, when Bitcoin went on this most recent rally from the lows at 15,500, it spent most of its time trading in this healthy orange ratio where we've been above the 0.5, we've been, trading round the 618, round the 786, and as soon as you can see we kind of fall into the rest of the fib, the 382, the 236, and the 0, this is basically when you have these absolute knee-jerk reactions. We had a knee-jerk reaction over here. I really think we're just kind of solidifying the next breakdown. A retest of 28,000 before moving down lower, in my opinion, would really be nice to reset bearish momentum and also allow for some short scalps before moving back down to the downside to the bottom of the channel, round about 24,300. So there we go, my friends. That's all I've got for today. Like I said, in terms of Bitcoin, we're really just focusing on the macro right now because what is happening with this most important chart is super important. We're really just waiting for a decision. Are we holding the 200-week moving averages resistance? Are we going to break above 28,000 and push higher? Or if we start falling beneath the 200-week at 26,400, if we start losing the EMA ribbons bull market support bands at 25,800, that's clearly going to be a sign that the bottom is not in, and this retest, this throw over of all of these moving averages is going to result in an absolutely brutal move, backed by the start of a new monthly candle, backed by the fact we've just got rejected from the 618, and also backed by the fact that we have a weekly MACD cross coming to the downside very soon. If it doesn't happen on Monday, it's probably going to happen next Monday, ladies and gentlemen. For today, that's all I've got. Like I said at the start of the video, me and Trezor have partnered and we are giving away a Trezor Model 1. So make sure you come and join the Discord. Make sure you come and enter this giveaway. I'll personally be using a Trezor to house my main Bitcoin account. I still do have Ledger devices. I have multiple hardware wallets from multiple different companies. And in general, I do recommend that you do have multiple hardware wallets to secure your cryptocurrency, especially if you do have a decent amount of cryptocurrency. I wouldn't always recommend to just rely on one hardware wallet provider, but Trezor right now is going to be housing my main Bitcoin wallet for safety reasons. They're open source, and also some other hardware competitors like Ledger have been pumping out some updates which are unfavorable to the community and for safety reasons. So this is why I'm going to be focusing on Trezor. This is why I've partnered with Trezor, and in general I use their products anyway and I recommend them. Like I said, if you want to check out their store, I'll leave a link in the description down below. So all I've got for this video, my friends. If you did enjoy it, make sure to let me know down below by leaving a like and a comment. Share the videos with your friends. If you want to further support the channel, feel free to click the join button and become a member today. Follow me over on Twitter at 618_cowboy. So all I've got, Spinny Boy Cowboy Trades. I'm out. Peace.